Hello again, welcome to another episode of the Uranium Market Minute. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you again for tuning in. Really appreciate you being here. Again, before we get started, nothing in this video is intended to be investing advice. I am not your financial advisor, and this is not financial advice. Always do your own due diligence when investing, and always take responsibility for your own choices. Thank you again for tuning in. Let's jump right into the daily scoreboard here. Spot price of uranium down again today, 37.75 mid-market. This slide has been much deeper than most of us expected. Oddly enough, the equities in the space are not really following suit and have been holding up relatively well for the most part, considering that we've slid down from 52 a pound to now a couple dollars under 40 a pound. Still here, only $5 up from where the run started back in August, mid-August, when the Sprott Physical Uranium Trust ATM went live. So basically what's going on right now is that the Sprott's Physical Uranium Trust's US OTC ticker SRUUF is in sell only. So the brokers that do still have this ticker on their platform, you can only sell it if you're actually holding shares. You can't buy it currently. There's a new SEC rule. It was out a few weeks ago. Sprott is needing to update that paperwork to be in compliance with this new rule before the OTC US ticker becomes free trading again. We expect that should happen shortly, within maybe a few weeks. We should see that maybe November at the latest. I don't believe that this market is hinging on that happening, but clearly that is having an effect, even if the volume on the TSX generally is greater than the OTC. Still having it on a lower volume listing, such as the OTC, or lower volume market, still having it as sell only clearly means there's only selling pressure coming from the US side of things. So that's going to turn around. And even with that happening, Sprott is still buying a pretty substantial chunk of uranium here. Yesterday, they purchased 300,000 pounds, raised another 14.7 million in new share issuance on their ATM. They ended the day with 11.7 million in cash and closed out the day at a 2.9% premium to NAV. I believe likely they're still today at a premium to NAV. Issuing more shares, buying more uranium. This is exactly what this trust was intended to do. And in my opinion, what's happening is there are some sellers that are highly likely to benefit from the price being lower. These are most likely traders that are doing this and taking advantage of that, because just consider the what's happening here with Sprott being in the market. You know, they're essentially a buyer that is not really looking to buy low and sell high. So why continue to lower that ask if they're willingly coming into the market as a price insensitive buyer? So that's my opinion, that somebody is manipulating this price down, but the market is not really reacting how traditionally equities do react at the spot price. So I think that the market is sniffing something out here. Since August 17th, when their ATM went live, Sprott has acquired an average of 138,000 pounds per day. That's incredible. If you annualize that figure, it's more than 20% of the annual global demand coming from this single vehicle. So that's just absolutely huge. And that includes the past few weeks of significantly lower volume purchasing. Since the 17th, they've now raised $505 million of new capital, and they've acquired 11.8 million pounds, just absolutely huge. Turning to the ETFs, URA again, today, reported an increase of outstanding shares in 50,000 shares. URNM reported no change. That's 822,000 mandated buying by URA. Not huge, but interesting that they're continuing to issue shares. The AUM of the two ETFs together, 1.6 billion. Turning to the trading action, yesterday we had a pretty strong day. However, today we're seeing kind of mixed action, mostly red, but not hugely down, especially considering the way that the spot price is acting. Let's take a look at a couple charts here. Starting off with URA, looks like the URA is still kind of consolidating sideways in a slightly rising consolidation channel over the past about 2 weeks. Still have the long-term moving averages moving up, volume diminishing, indicators, trying to kind of find a bottom, trying to reverse here, but really this is not really all that directional here. Not huge selling, not huge buying, just kind of chopping sideways. And again, to compare that with the price action that we've seen over these last 2 weeks, compared to the spot price action, is really, really encouraging. URNM. North Shore Global Uranium Mining ETF. Similar, very similar chart. Again, long-term moving average is moving up. Indicators sort of directionless, but considering that the spot price has been falling during this period of time, it's quite encouraging. Sprott Physical Uranium Trust broke down through that 50-day. Looks like it wants to fill that gap. I think if we see another few days, another few dollars of the spot price falling, we're likely to fill that gap. In my opinion, anytime now, look at this, how many days in a row this thing is falling. This is a screaming buy, in my opinion, and will be in the coming weeks if it continues to fall and then find a bottom, likely in that mid 30s range is what I'm thinking per pound. I think that the selling is very close to being over, and we're looking at this gap fill and a very, very attractive entrance for anybody who's bullish on uranium in the long term. Let's take a look at some of the large caps here. Cameco, a pretty big down day, but again, just still in this upward rising kind of consolidation channel. Indicators looked like they wanted to recover here, but turning back down. Not a huge deal. Not looking necessarily bearish, not looking super bullish, just still trying to find a direction here. Although, again, the long-term moving average is also still rising. And we're quite a ways down above that 50-day. Are we going to see a trip to the 50-day? I think if we see another couple of weeks of chop and the spot price falling, perhaps we could see a reset down to the 50-day. If we do, in my opinion, that's a really strong buying opportunity for anybody that's bullish, which I absolutely am. Next gen, very similar looking chart here. So most of these puppies are just trying to find a direction here. And I think that what we're seeing is an overall generally positive sentiment in the space, all things considered. There's certainly some doubt happening out there, but considering that the spot price keeps falling and all of these charts are showing this similar pattern here, that to me is really, really looking good. Let's take a look at the mailbag and see if there's a question for us today. Let's see. Justin, why do the uranium equities seem to be largely ignoring the sharp drop in the spot price of uranium? Well, I was just kind of speaking to that, right? So basically, there's two primary markets for uranium, and they're both connected, but they're both quite different. And that's the spot price and that's the long-term price, or even the mid and long-term price, anything beyond a year delivery. So the spot price is anything less than 12 months delivery. It's the price mechanism that is most visible to the markets. It's updated daily or sometimes intraday, depending on how frequently there are bids coming out into the market. Numerco on Twitter, at Numerco, Numerco, they update frequently. Anytime there's a bid that comes into the market, they'll post that. And so that's something that the investors watch a lot. And it's kind of interesting because it matters and it doesn't matter at the same time. It has a reference to the term price, and obviously, you know, in an environment that's lacking in substantial term contracting, the term price is sort of reflecting the current spot price plus future interest rate and capital rates baked into that to come up with sort of a base escalated price for the term contracting for uranium. In a real term contracting market, when some of those contracts are actually made public, that will dictate the actual term price of uranium. So right now what we're seeing is a spot price that's making these really big fluctuations, a really big move up on pretty high volume, especially from an end user. Like Sprott is technically an end user here. They don't intend to sell those pounds back into the market. And so that's why we saw that big move. And what we're seeing now is some willing sellers selling and lowering their ask for Sprott to pick up 100,000 pounds here, 200,000 pounds there. But also we're seeing some trading arbitrage. So, you know, a few million pounds here and there, just trading hands back and forth, trying to make some money on the direction of the price. But the term price is something that I think that the more sophisticated and long-term investors are watching more so than the spot price. So even though we report on the spot price every day, and it absolutely matters, to note that the term price did just rise for the month end of September substantially. Trade Tech reporting a long-term price of $45 a pound, up about $10 almost from the previous month. Pretty substantial. UXC reporting $40 a pound term. And so to see that happening is a strong confirmation of what we expect to see in this market. And what we're seeing now, in my opinion, is trading arbitrage and some players that want that price to fall in the short term. And as soon as the Sprott Trust has that US OTC ticker back in the game, we're likely to see those volumes increase. And at least we'll see some balanced buying and selling, not just selling coming from the US side. And once that happens, in my opinion, that's going to really put some more pressure on the spot market. And Sprott will be able to have increased volume, trading volume. They'll be able to raise more money, be able to buy more pounds, obviously. And of course, we have the utilities coming back into the game. And I definitely, I can guarantee you the utilities are waking up right now. They've been in a term contracting slumber for a number of years. And that's not necessarily because they've just been asleep at the wheel. They haven't really had to sign term contracts, right? Some of them are covered a little bit out into the future, and they've been able to come into the market in the short and midterm, purchasing in the spot market, purchasing from carry traders relatively easily, with good liquidity, with abundant pounds available, with not too high of premiums for 2, 3, 4 year delivery. And it's been abundant and cheap and without fail for many years. So on one hand, it's difficult to blame the utilities for not coming back into the market and voluntarily signing higher priced long-term contracts because they haven't had to, even though the miners are like, hey guys, look, if we don't do this soon, we're going to have a situation in a few years, which is true. So now, but I think that what we're seeing is some utilities waking up. They're coming back into the term market. They're putting out some RFPs, some requests for proposal, looking for providers of uranium and what that price environment is looking like on the mid and the long term. That's a very, very strong signal for this market. It's something we've been looking for years, and waiting for it to happen year over year over year. And now that we have the financial players and we have players like UXC coming out and vocally saying that they expect the spot price in the next 12 months to be somewhere between $35 and $60 a pound. Okay, that's a really wide window, and you can't really blame them for taking that wide of a stance on it. That's not really putting their finger on what they expect to happen, which in my opinion, what the utilities, which are their customers, are expecting them to do. But to acknowledge that UXC is even saying that $60 a pound is even within the realm of possibility is a massive development. Okay, you don't understand. They have been unbelievably conservative for years. And if you've been paying attention to this, you know that they've sort of just been kind of, I don't want to say asleep at the wheel, but they've been very conservative in their price forecasting, seemingly not really recognizing how quickly this could move in a thin spot market with a consistent buyer. And now that that's there, and now that they're saying that it's within the realm of possibility for the price to be, $60 a pound within a 12-month time frame is really, really big. So the traditional players, the conservative players in the market, they're waking up, they're recognizing what's happening. And this lull that's happening right now, especially if you've come into this thesis within the last few months and you might have thought that you missed it on that big run that happened August and September, or even from December through June was a big run. And we aren't likely to reset back to those pre-December levels. That would be massive. And I don't think that's going to happen, obviously, but to see this 25% correction off the recent highs, if we go to maybe a 30% correction, the recent highs, absolutely no worries. And if you're still adding here, add when it's weak, because this is a fundamentally strong, very, very strong thesis here. And it is going to play out, in my opinion. And that's where our money is. And that's what we're betting on. That's why we're so focused on this sector, because it just moves so quick when it does. So take advantage of the dips and recognize that regardless of how good things look on the surface, fundamentally, that we will see pullbacks, we will see profit taking. Certainly if anybody bought the US OTC ticker in August on the way up, and they're only allowed to sell that, clearly that was a sign that some selling was in store. Why not take those profits and wait for the thing to reset? I don't blame those US holders for doing so, but as soon as this turns around, I think it's going to turn and it's going to run hard. So we're positioning here. We continue to add to our positions and recommend that our newsletter subscribers add in tranches, as always. And if you're interested in our service, go ahead and send us an email, support@uraniuminsider.com. We'll send you a sample newsletter. You can get an idea of the type of content we put out. Everybody have a great weekend. We'll see you next week. Cheers.